Hey guys, welcome to a new video of the Smart Money course, and this video is called Market Structure. And what is market structure? What is market structure? Alright, so market structure is basically helpful for you to know in what direction you should be trading. Alright, so let's say suppose the market is trending upwards, alright, and with the help of market structure, you can understand if you should be buying or selling in this market. Alright, and why market structure is really important, because this pattern keeps on repeating and repeating. It's kind of complicated at times, which is why I have another episode and another video of this in the course, which is Market Structure Advanced, and I'll go through in-depth market structure in that video. For now, this is gonna be just the basic. Now, to understand market structure, you need to understand higher highs, higher lows, lower highs, and lower lows. Now, what are they? I'm gonna show you, don't worry. So, to begin with, how it works is basically market moves in cycles. So market keeps on forming the same patterns to move itself. So basically it either forms higher highs and higher lows, or lower lows and lower highs. So so basically it goes like this. All right, so higher highs, higher lows, higher highs, higher lows, highs, higher lows, and then suddenly a lower low forms, and then again lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this is kind of just an example, just the basics of how market moves. Now just to give you the example, over here, higher high, higher high, higher high, higher high, higher high, higher high. Alright, and over here, higher low, right? Higher low, higher low, higher low, higher low, higher low. Again, another one. And this is a lower low. Now, when a lower low forms, that's when the market structure is shifting. All right, lower high, and this is basically what it forms. All right, so yeah, something like this. Yep. And yeah, so this is basically how it works out. Let me just write these down for you guys. Higher high, higher low, lower low, lower low, lower high. Now, this is just the basic of market structure. As I said, we're gonna have a more in-depth video in the future where it's called Market Structure Advanced. Now, the basics, basically, you can easily see here that the market over here, the structure was broken, right? Over here, the structure was broken. It formed a lower low, which means that it wants to go down now. Now, this lower high confirms the lower low. Until this lower high is formed, this is not confirmed. This can just be a liquidity capture, because as we know, stop losses are below the low. So as soon as you see a lower high form and then a lower low form, that means market is shifting structure, which is market shifting its trend. Now, so far, when you have just this much, you can already tell that the market is bullish. Why? Because it's forming higher highs and higher lows. So when you see that, what you start to look for is buy setups to go long and not short. So this is why it helps a lot, because you can understand if you need to buy or if you need to sell. So when you see the market trending upwards, you can easily just start looking for buys, and same goes when you see market shifting structure, and then you can easily just start looking for sells. This is really helpful when you trade, especially from the higher time frames, because you can understand where the market is heading long term, and it helps a lot. So let's get into the charts and show you some examples. Let's look at this, for example. Let's say, let's see, just trying to find an example. Yeah, this looks good. Yeah, this looks good. So we can see over here that market took out this liquidity. It was trending downwards. Over here it was trending downwards, and then it took out this liquidity, and what it does is form a higher high, right? Higher high. So the structure is broken. Now as soon as a higher high is formed, we are expecting a higher low, as we know, right? So a higher low is formed, and then this is the structure, so we're expecting a higher high again, and it doesn't form a higher high until over here, higher high, and then another higher low, again another higher high, another higher low, and so on. So you can see, I will just mark this up for you again. This is a lower low, right? Sorry. Yeah, so this is a lower low, and let me just put this down. Yeah. So this is a lower low, and we are expecting a lower high. However, it forms a higher high. Why? Because the liquidity is taken and it wants to go up, right? A higher high, and then we have a higher low, right? Higher low, and it goes like that. Just keeps going like that, right? Over here and over here, and then again another higher high. Now we're expecting a higher low. It does form another higher high until over here, and then forms a higher low again. So when you see something like this, suppose you have the market till here, all right? You saw the market, suppose over here, right? Now you can already start looking for buys around these areas, right? Because you know the market's trending upwards. So if you wait for it, and if you can understand the move, you can easily catch this buy, especially over here, because it looks super good. And same goes for the next setup. If you know the market's trending up, you can easily look for a buy around this area, and it's exactly what happens. Exactly what happens. Yeah, exactly. Bang, gone. So market structure helps you know the trend, know the bias, and especially when you're trading long term, especially when you are trading from the long term, what do you call it, bias, helps a lot. And I'll talk more about it. This is just the basics of market structure. I'm going to talk more about it in that one section, because it helps a lot when you look at it in a different way that I'm going to show you. Also, just an easy trick about market structure is basically to understand if the structure is broken or not. You must start looking at the candles, which is the bodies. All right, market structure equals bodies and not wicks. What do I mean by that? Is basically when this is broken, when this body is broken, when a body closes above this line is when a higher high is formed. Same goes over here. When the body closes above, a higher high is formed, not the wick. Remember, not the wick. The wick doesn't matter. The body has to close above. Same goes over here, right? The body has to close above. That is why this is not a lower low, because the body did not close above. Same goes for this. The wick closed below, but the body did not close below, which is why it's a lower high, right? So bodies and not wicks, this is a key factor while trading, while understanding market structure. And another easy way to look at it is just change your candles into line chart, and you can easily see if it's broken or not, because the line chart doesn't show wicks, it only shows the bodies. So this helps a lot as well. So I'll see you in the next video. Do follow me on Instagram, and catch me up on Telegram or Instagram if you need any help. Thank you.